Gold futures recouping earlier losses this Thursday, but it's still stuck in a tight trading range. We have Bill Baruch of iiTrader with us now. Bill, thanks for being with us.
Thanks for having me.
Bill, investors were left to wonder today the exact timing of the Fed Reserve's plan to taper its bond buying program. I'm catching you right after Bernanke's testimony in front of Congress. It was the second and final day of his semi-annual testimony to Congress. What do you think of the way the market has reacted to his thoughts?
Well, what we're doing is we're seeing the market fall back and consolidate down to post the pre-FOMC minutes in Bernanke's press conference last week. We gave up these gains after the market had tested 1,300. Some traders were finding some value down in the mid-1200s going into the FOMC after his response in the press conference, and then leading into this testimony, value in hedging some of the risk and uncertainty.
Last time Bernanke spoke, Bill, it caused a lot of uneasiness amongst investors. We're not seeing that as much now. Has the volatility calmed down?
Yes, gold is sitting here consolidating in a range. We define to all of our clients and our newsletter that the range is 1266, 62 area to about 1300. We need to break out of one of those two areas in order to really start moving. I mean, other than that, we're consolidating until we see either further increase in economic data that's a positive side, or worse data that's going to make this market anticipate no taper, and we're heading into 2014 with the current policy.
Bill, and on the silver front, what are we seeing?
Well, $20 is to 19 is becoming a median price, and we're seeing consolidation of that too. But we're looking for gold to really lead the way. And if this market, we traded $30 from the highs yesterday. And if this market gets below and closes below 1262, it's game on for the bears, and you're going to see a lot of liquidation. Really, what we've seen is the market consolidate, quiet down. But $1,000 is still in the cards, and we believe really that's what would lead something like silver down and retest to our major support of 1720. If not lower.
And going back to gold now, Bill, when we're stuck in a range, how should you be playing this?
Well, really, if you're holding physical gold, the worst thing is to see this market consolidate, and we may see this market consolidate over time, because if you're holding and you have all your cash in physical gold, really that's going to be losing money in its own over time there. So if you really want to protect yourself and look for a possible a breakdown, if the market recovers, that's great, but we really need to see gold above 1323 in order to say this bear market is starting to neutralize.
Bill, thanks for your thoughts today.
Thank you for having me.
And thanks for watching this edition of Kitco News. You can email us at newsfeedback@kitco.com. Thanks for watching.